itself. And given now it's been more than 48 hours, I think what we will not do is to just repeat or highlight what is already common knowledge in terms of what you are seeing in the media and reported on the press, but intent really is to go beyond and understand what does this budget really mean from a technology industry context. And when I say technology industry context, I think I don't want to limit ourselves, because it is really the India lens, and technology is no longer a sector. I think when we do something where technology can grow and the more adoption can happen, I think it translates hopefully into a more robust economic growth for the country. So as Nasscom, I think we have been working in a more consistent basis with the government and industry to move the agenda forward. And therefore, the budget is just one more milestone for us to reflect on where we are and what we have achieved. So just in terms of some of the things that we have been working closely with the government on, this has been an amazing budget in terms of some of the things that have come together. So there are two things that we want a budget to do, and this budget does both. One, we want predictability. So in some sense, we want the budget to be boring, right? We don't want disruptions and too many changes. We want certainty. So I think it kind of clicks on that. The second thing is that we don't just want the budget to be boring. We also want the budget to be bold, so that the tax policy can actually enable the other parts of policies to drive growth and all of that. And I think from that point of view, you are all aware that what has happened in the context of international taxations, whether we think about the safe harbor regime, whether we think about the advanced pricing agreements, whether we look at what is happening in the context of our AI infrastructure layer, when we think of data center, and also in terms of tax administration, and the broader context, which is a large challenge in terms of saying that how do we move from education to employment, and really think about skilling, think about entrepreneurship across the SME segment, across the micro segment. How do we also create a content or a creator economy? I think the budget has solid proposals to take all of this forward. And I think what I will do now is to really go into these discussions, and I will be introducing my speakers as I bring them into this conversation. So and then I think we'll try and see how we can make this really valuable and interesting from from our audience perspective. So with that, I'm going to invite Joint Secretary Revenue and Tax Policy, Mr. Balasubramanian Krishnamurthy, who is at the Department of Revenue, Ministry of Finance, Government of India. And dear Bala, it's really a pleasure to have you in this conversation, because we have been engaging with you as part of this journey in terms of tax reforms through various cycles of budgets and even outside of the budget. So as somebody who is really at the heart of some of these policy conversations in the government, how do you view this budget as attempting to do, and what has been the approach when you think about it from a tax policy perspective? That's something that the technology industry should be able to appreciate and understand. And how do you really contextualize this reform? So you have about 5-7 minutes to really articulate some of this, and feel free to go in a little bit of a detail, but we will come back to you with more of this conversation as we build forward. Thank you.
Thank you, Ashish, and it's thanks for having me in speaking to your industry colleagues and the fellow professionals. As regards the budget, it is in my view, this is one of those budgets where we have seen the thrust being very heavily placed on the ITES segment. And off late, if you had seen last few budgets, I don't think this much of an importance was ever given to the IT sector itself prominently. So from that point of view, I think it's a very important budget for the tech sector from the tax proposal side, because what we have kept in mind as the broad objective and the broad pillar based on which these proposals were conceived. One was, of course, to give stability to the existing firms who are in India, and of course, in the form of safe harbor, in the form of exemptions. So we give a long window of predictability, and lastly, very importantly, and this is of course for all of the taxpayers, which includes the ITS itself, there is some thought process with which we have proceeded on the ease of administration. So if you look at the provisions with respect to penalties or prosecution, or with respect to the updated returns, the revised returns, and also in terms of the litigation management, one proposal which is not very visibly seen by many in the last 48 hours is the pre-deposit itself on the income tax side, which has been reduced to 10%, and also the issue of how the penalty and the income tax assessment is going to be weaved together in one particular assessment. So these are certain aspects where we kept the ease of administration, the ease of compliance in mind while conceiving these proposals. But having said this, there were a lot of questions raised, last year when we came up with the new Income Tax Act, as to why government was not very bold enough to take certain policy changes and policy issues in the new Income Tax Act itself. Even at that time, we said that we are just clearing up our decks. We are just cleaning the Income Tax Act in such a manner that we want to build from a position where we have cleaned up the dais, right? So, and therefore, we have from the day after we enacted the Income Tax Act, we have looked at various issues which came through the select committee itself, and looked at various aspects as to where we can make certain policy changes, so that it will be a good start for the new Income Tax Act itself. And that is where the revamp of the prosecution itself, the prosecution provisions, have come in terms of the penalty and the other issues that I just talked about. Those are some of those building blocks that we are trying to look at. And I just want to put it out here that this is again a journey, and we have not ended it. And we are starting the new Income Tax Act from April 1, and we'll continue this journey of making the ease and the simplicity the cornerstone of the new tax administration, and under the new Income Tax Act. Coming to the IT industry itself, the focus is clearly on preventing the disputes. And in fact, rather than talking about litigation management, we are looking at preventing the dispute itself, because one aspect that even as a person who has spent considerable time in the industry, I would bet on tax uncertainty as one of the biggest cost rather than the tax rate itself, because the businesses can factor in tax rate as a cost, but not the uncertainty. And therefore that is very, very important in terms of how we embark on this journey of coming to a system where we start preventing disputes. And that is where the provisions of safe harbor, the provisions of presumptive taxation, and the provisions with respect to certain aspects of how the updated returns have been enabled at various cycles of assessment, that becomes very, very important. Because I feel, this is my personal view, and of course the tax administration would not disagree with me, the aggressive or the unpredictable taxation is not going to help India's call as an attractive global head. And therefore, when we ask for private sector to make bold investments, bold decisions in terms of the scale and the systems that we kind of expect them to do in India, we need to provide an environment which is conducive and which can enable them to make those long term decisions in favor of India. So from that point of view, I think the implicit message is very clear that we want to work with the industry in terms of how they look at India as an investment destination, and also a destination where they keep adding investments as they move along in terms of the existing firms also. And as far as this is of course on the direct taxes, and I don't think the mindset is any different on the indirect taxes as well. Be it GST or customs, the same mindset of providing stability and predictability is something that runs through all the proposals that you would have seen. Especially in this budget, we have done a lot of reform measures on the custom side. Of course, on the GST side, you got to hear most of these, from the last GST Council itself. It is just giving effect to the proposals which were decided in the last GST Council. So, in my view, the narrative is very clear. We want to make India the most attractive destination, and ITES being one of the flagship industry is something that I'm very happy that the government has come back to bank on this industry, for delivering the next level of growth in the Viksit Bharat.
All right. No, thank you, Bala, for really, articulating something which, from an industry point of view, is reassuring, and given where we are today as an industry. So we are a roughly $280 to $90 billion industry, and 75% of that at least is exports. And what we are also seeing is that while the domestic market is a small proportion, but over the last few years at least, it is growing at a roughly about 40% faster than the export market is. So I think from a point of view of a policy ecosystem perspective, I think this has external benefit will also flow into the overall digitization journey in India itself. And I think one message which I can take from this budget, which I would underline as we move forward, is that for us as Nasscom, okay, I'm getting a feedback that maybe I'm not coming across very clear. So let me know if this is better. But what I'm really seeing is that from a taxation point of view, this budget really puts our tax policy in a place where we can see it becoming an international competitive advantage. So I think that is something at least from a broader tech industry, is a great thing to probably see. And we will test out whether it's really true as we move forward. And I'm going to switch to Suchint. So Suchint, if you can hear me, and Suchint is a partner taxation on transfer pricing from Deloitte India. And Suchint, we have been really, collaborating on this particular aspect of transfer pricing. So whether it is, looking at the safe harbor regime, or whether it's looking at the framework advanced pricing agreements, and this has been a multi-year journey. And we have seen the government of India really over the last few budgets reiterate the need to reform this, and we have seen some progress. But this particular budget, in some sense, marks a landmark shift in terms of what we are seeing as actual proposals. So, given that, and for the purpose of our audience, what really this means is that there are a lot of these use cases where, in our industry context, there are these cross-border use cases where the entities are real party, and therefore for them to do a international transaction, not a market price which is determined from a market lens only, and therefore there is always a question around that: how do you determine the market price, and therefore are you paying your fair share of taxes? And one of the way you can actually have an ease of doing business is to have a green channel. where you kind of pay, you basically say that, this is your margin, which both government and you are happy with, and it is predetermined, it is presumptive. And then once you are qualifying for that, you kind of go through smoothly. Now, the problem with that green channel had been that green channel was so narrow and so complex that nobody really from our industry, when I say nobody, I mean barring maybe a small set of entities, were really able to participate in it. So now that is a one big reform which we have seen that has happened. And then similarly, when you think about the advanced pricing agreement, I think that again is something that in terms of intent, we are going to see hopefully translate into much better ease of doing business. So I want to ask you two questions. One is just help us explain and help industry understand that what does it mean for a firm on the ground? Whom all does it impact? Is it only about the GCC, or is or is there a broader use case? And talk about what does it mean from a point of view of APAs? What does it mean from a point of view of safe harbor? And then I'll come to you with a follow-up question on what we want to do next. So Suchint, come in, please.
Yeah, thank you, Ashish. And I think sir made a number of good points as to why tax policy is conditioned towards India as an investment destination. So the budget proposals, as Ashish you rightly mentioned, signify a holistic reform that serves as a green channel for normally GCCs, but for that matter, multinationals that set up IT, ITS, KPO, BPO, and R&D in India, and a golden visa for them to land and expand. The construct of the safe harbor rules as they are now reformed are architected on four cornerstones. The first one is simplicity, in the sense that there is an automated process with little administrative intervention or discretion. Second is certainty by giving it a 5-year time frame as opposed to what used to be otherwise a tension-filled wait for the announcement of the rates of safe harbor. Scale, which is the third point, which is a direct increase up to 2,000 crore across service categories. And the fourth cornerstone is moderation and competitiveness at a 15.5% rate. Therefore, the reform travels beyond turnover thresholds, rate changes, beyond classification rationalization, and beyond annual compliance. It really signals the use of tax policy and administration as a lever for GCC investment and growth, and tax certainty as an investment tool. I think the other point is about APA commitment in 2 years, which is consistent with the MAP Forum commitment. And the other element is the added advantage of safe harbors for data centers, which is another boost, with a comprehensive regime around it and a cost-based approach, which is noticeably important from a certainty and a structural point of view. So when you put all of this together for relative to the past regime, it is a paradigm shift, and it enables international transactions of any form of a multinational company that typically has parent headquarters outside of India, and where the Indian entity serves as a service provider of an array of services to be able to relatively swiftly and seamlessly move towards this regime, adopt it for an extended period of time, freely invest in the country by way of infrastructure, by way of also moderate margins that are relatively much more competitive with very low. And I say competitive because it cuts across an array of high value as well as low value services, and therefore it serves as that kind of a green channel. To the point about can it be used in a number of use cases? Well, captives certainly are a use case. There can also be cases where the company could serve independent clients as well as associated enterprises. And to that extent, again, a transaction value that is as high as 2,000 crore could serve as a potential safe harbor recourse for serving the group companies in addition to third parties. Of course, third parties will form an independent benchmark, and that's an independent pricing arrangement. But the safe harbor does give companies the ability to serve group companies with a predetermined determined margin. So I'll just take a pause there and wait for any feedback or follow-on questions, Ashish.
Yeah, so Suchin, that's very important point, and we are really hoping that we'll be able to get some real feedback from the industry in terms of as we see the operationalization of it. And what will be amazing is for us to knock this off from our agenda itself to say that there is no more reform that we are really looking for as far as the safe harbor and potentially, I mean, APA would be an ongoing because we at least I hear from the industry that even the bilateral APAs we need to kind of see what can be done, but obviously that's a little more complex thing. But one of the things that I'm reading into this is that once you try and significantly hasten up the timelines on the unilateral APA, then I think it has a cascading effect on everything else also, hopefully, in terms of the systems. For example, the renewals will be hopefully much quicker. And then how does it translate into the bilateral APAs is something. I just have one quick question to you, and you'll have to be quick in your answers because I'm just keeping tab on the time. So when we get print of this, which is not yet in front of us, what are these three things that you would like to see in the fine print? And what are those one or two things potentially that you like not to see in that fine? Anything in your mind, Suchin?
Yeah, I think maybe 2 or 3 points. One is that we'd like to see rules that are practical for addressing the element of risk. Low risk is in order. Insignificant risk today, as per the circular, is probably not all that practical. Clarity on the cost base, on the lines of how it is written up in, let's say, APA agreements. The ability to declare the functional profile by way of a objective, potentially a yes/no type of a table, which will enable collection of information for statistical purposes, but also enough to evaluate the merits of the application. And we would also like to see an updated definition of KPO and R&D, such as inclusion of robotics, machine learning, while keeping the door open for tangential and natural progression. From an APA standpoint, it would be expected that cases will move from APA to safe harbor progressively, so that more complex cases go into the APA, and therefore, in part, the APA machinery will get freed up of a lot of the low value cases. But with that being said, it will still have to be augmented. And a framework process would be helpful, just as has been entered into with the United States. From a tactical choice point of view, of course, companies that are going into an APA, that are negotiating an APA, those have concluded APAs with unexpired terms, will all need to take calculated decisions as to how they position themselves relative to the new offering of the safe harbor.
All right, great, Suchin. Thank you very much. And I think at least from a Nasscom point of view, probably my initial reaction would be that probably we don't want many more definitions and classifications and clarification. I think a broader set, IT services, maybe finance said it in the speech, and the way it is broadly understood. If that is what this delivers, then that would be fantastic. But thank you, Suchin. And I'm going to quickly come to our next expert. So Shefali Goradia, who's chairperson Deloitte India. Shefali, I'm going to come to you. We have often discussed on a lot of these taxation issues with you. And particularly, I'm going to spotlight this entire, development around how we think about the transactions between the foreign CSPs and the Indian data centers, and generally how we look at this entire market itself. So we know that the thing, at least from a Nasscom lens, that we had been driving was to say that look, there is so much of committed investment. We are talking about a $70 billion number, which has already been committed. We do want to translate this into an actual investment on the ground, which we are seeing, on the horizon. And we also want it to grow manifold. And at the same time, we also want to make sure that the Indian data centers, they continue to prosper. and we do want to also see that why shouldn't we have Indian CSPs also, and they have a place in the sun in terms of the market they look at. So I think our interpretation is that the permanent establishment risk is now implicitly addressed through a set of mechanisms. And the way, at least I was reading the tax holiday, was that it is more of a future looking provision where really, I mean, if you are a CSP in the US and you have a client in Europe, the real value of this tax holiday will come in is that if some of that CSP work you bill out of India, which probably is not really happening. So in that sense, it's a carrot for the future. So I know that I'm correct. It will be important for us to place this tax holiday in perspective, and we will do through. Hopefully, by the end of the journey of this webinar, we'll have clarity. But your analysis of how are you looking this entire space? What does it mean for the industry? Are you happy? Is there something left?
Thank you, Ashish, and good evening, everyone. Truly historic, and as Bala said at the beginning, it's very heartening to see how you see that India has pivoted back to the IT industry and using the entire IT industry GCC as the growth engine to move forward towards Viksit Bharat. And all the tax policies, and many of them are not really new incentives or any cutting down on tax collections. This is just more about the ease of administration as well as giving that clarity and certainty to the taxpayers. So to that extent, this is really a positive budget, especially in relation to the cloud service providers who are, and many of them are already operating. And some of them are in the process of setting up, new data centers and for both AI as well, which will process huge amount of data. And this policy change comes at a very right moment in this journey because before they, commit to new investments into India, many of them were looking for some amount of tax certainty. Now, what are we really talking about? What is this tax holiday? Because this is not a tax holiday as we normally understand in the Indian context for our IT units or, let's say the special economic zone units. This is more for the foreign companies that are using data center services from India. And in the first instance, largely because these foreign companies operate from outside India, merely for using data center services from India, in any case, they should not create any taxability in India. But there has been the concern around any future litigation that could arise. And therefore, many of them had approached, the government to see, if any upfront clarity can be given on that. Now, this is again not very uncommon. They have been setting up data centers in many countries around the world. And in many countries, including from some of our competing countries in Asia itself, they have been given some kind of ruling or assurance that such foreign companies that are using local data centers will not create a permanent establishment. And in many countries, they also got an assurance that the data hosting services that are provided from their local country would attract a low markup. Now, in that backdrop, when you now look at India, clearly, I think the ask was that we have a similar exemption from permanent establishment. This could be achieved either through a private ruling mechanism or by way of government circular or a statutory amendment. And clearly, what the government has done is by changing the law and providing this incentive, which is for a fairly long period till 2047, it really gives a great amount of certainty that for the entire period, which is 20 years plus, that they will not face any taxability or tax-related issues in India. And how does that benefit? I mean, they are using data hosting services from the Indian data centers, and many of them, which are foreign cloud service providers, they use this data hosting service to run and operate a cloud business worldwide. which means that they have customers which are outside of India, and at the same time, they also have cloud customers in India. And one of the conditions which is attached to this tax holiday, it says that you need to operate in India through a local reseller, which means that you shouldn't directly be selling your services to Indian customers without paying any tax in India, but you should have a reseller entity which then offers this entire top line of the tax revenues that are generated from Indian customers to tax in India. So that is one of the very logical requirements, which is understandable. Does this combined with the safe harbor of 15% that Suchint was just referring to, does that give us a holistic solution? I think we are largely there, because the assurance that just merely you're procuring the services, data hosting service from India, that alone does not create any taxability. And we have a precedent in some sense, because when India opened up the outsourcing industry, when that was launched, we did have a circular which said that merely because a foreign company is outsourcing some of its services to Indian companies, you will not have taxable presence in India. So it is something similar to that, but far more certain, since it's a part of the statute itself. And combined with the safe harbor of 15%, it does give a holistic solution. But
all right. So, Shefali, if I can just kind of, come in here a little bit, and I'm not a tax expert, so I'm probably ask a little bit of simple questions. And what I want to do is to bring in Bala here, because no better than Bala to kind of, further put some color on this. So Bala, I was trying to explain this provision to some of my industry colleagues, and I don't think I did a very good job of that. So given that we are on a webinar where we have the benefit of also having you, so we heard from Shefali. So one clear message which I agree with her is that yes, it kind of addresses the concerns in my mind fully, and no questions there. But I want to understand these two things separately. One is the safe harbor, which really says that there is an Indian data center and there is a 15% cost plus markup, and then that transaction is fine if you qualify. So that, I think, stands on its own legs now, and therefore there is the attribution fully in that particular context, right? So in my understanding, that even addresses the, if you are following that route, then there is no PA attribution. Now on top of it, what the government has done is this tax holiday announcement. So please help us understand this tax holiday a little more clearly from the government lens, so that we are able to communicate it effectively to the industry.
No, so I see your point, Ashish. I think Shefali did a very good job of explaining it. So let me try to explain it in a little more layman terms. That when you look at this entire cloud service business, right? There is a services component and there is a physical infrastructure. Now, what is happening is there are a lot of CSPs who operate outside of India, who have their data centers outside India, and and they are providing services globally, right? And they may be providing a part of services to India as well. Now, what government wanted to look at is how to attract a piece of that business, which is the physical infrastructure business, to come to India, so that it can create some kind of an investment-led multiplier effect, right? So now, for us to bring that data center physical infrastructure into India, we need to allay certain concerns of these foreign CSPs. Because once they put a physical foot in India, right, the concern of the foreign enterprises would be whether they create a presence in India much more than the physical infrastructure which is placed in India, right? The physical infrastructure is the data center piece. Now, whatever is the regular margin, which in our view we have put as a safe harbor of 15% on cost, if that is given to India, is that sufficient enough? Is the concern that the foreign CSPs would have, because it should not create a taxable presence much more than the physical infrastructure. So this is the concern that the foreign CSPs have. Now there are two ways of allaying this concern, or in fact three ways of doing it. One is to upfront say that there is no PE, there is no permanent establishment for the foreign CSPs merely because they are accessing and procuring data center services from India. This is one way of clarifying it. The second way of clarifying is it what Shefali alluded to, where some countries have given private rulings where they have said that if you give this kind of a margin, then you don't have a PE. It's a personal private ruling to each of the CSPs that has been handed over. Third way of doing it is what we have taken up, which is slightly I would say an out of the box kind of an arrangement, where we have said that we don't want to give a commitment on whether there is PE or no PE, because we don't know how the dialogue on PE is going to evolve globally, right? And one of the aspects that we wanted to provide is a long-term certainty, because as you see, this is not for 2 years or 5 years or 10 years. It is for 22 years, from the time that we are speaking. So when we are putting out a statement of intent not to tax, one way of saying is there is no tax, which is what Shefali said. But we don't know, what the global narrative would be on this particular issue. Therefore, without admitting whether there is PE or no PE, whether there is tax or no tax, we want to give a long-term certainty in terms of not taxing it and give them a tax holiday or a tax exemption, right? So that is what we have said. But what we have also said is that we recognize the fact that the foreign CSPs need not always, have a data center which is a related entity, right? They can procure from an Indian entrepreneur who wants to set up a data center, infrastructure in India for a foreign CSP. Why should we, not recognize that business model, right? So we said that if you are dealing whether with a related party or an unrelated party, it doesn't matter. We will give you complete exemption. We will not tax you. But if you have a related party, right, that related party which is having the data center business should give us 15% on cost as the safe harbor margin. So that is condition number one. If I have to put it as a condition, it is really not a condition, but this has to be understood as a holistic package. The second one, which is actually a condition, is that the foreign CSP, as long as it sells its CSP, the cloud services, to the foreign clients, then we don't have a problem. But moment they sell something to India, they shall mandatorily sell through a reseller entity, because that would mean that the reseller entity is taxable in India, and we will get the taxes related to the economic activity that is created in India. So this is the package which has been designed so that there is certainty for the entire ecosystem of the cloud services, including the data center piece, and also aspect of how the business with India, that is, if the CSP wants to render any services to India, how it gets billed and taxed, and how related party with respect to data center would be treated for tax purposes. So therefore, these three aspects have been covered in a very integrated manner, and therefore, in my view, it is more than a holistic solution that we can look for, and that has been provided. So which is what is creating a lot of comfort, in my view, for the foreign CSPs.
All right, so great. And I will just come to you, Himanshu, but I think I must say that Shefali and Bala, both of you have managed to at least give some more clarity to me, and I'm hoping at least to the part of the audience which have similarly been kind of curious that this kind of provides this. So simple way to understand in some sense is that both the safe harbor and the tax holiday are part of the same package, and collectively they provide this certainty, and at the same time ensure a set of tax revenue, the India's rightful share of tax revenue is also protected without necessarily going into the specifics of the putting out a kind of a answer on the PE itself, which is something that probably requires a probably wouldn't have been possible to do a industry-wide clarification, if I might kind of put it in simple terms. By its very nature, it is very objective. So now coming to you, Himanshu, and I know that
Sorry.
you were in a meeting and you've just joined. But so I have 2-3 questions for you. So
Sorry.
please,
Ashish, before
I'll come to
moving
you.
to those
Yes,
questions,
yes.
Ashish, I had two additional points on this entire discussion on data centers. So with your permission, if I can come in, please.
In fact, I was going to ask you that, you have along with me heard both our experts,
Right.
and because you are an expert yourself, now do you feel that this is more than
Yeah.
a sufficient
Yeah.
solution? Are there any loose ends? What's your verdict?
Yeah, a couple of points. First and foremost, I think this is a very, very welcome provision, and therefore my compliments to the Finance Ministry to come up with this proposal. But the one point that we need to be mindful of is that this tax exemption, as we may call it, will be applicable only to those foreign cloud service providers who deal with notified data centers in India. It's not each and every data center. The data center needs to be notified by the government of India. So we'll need to wait and watch for those guidelines to be rolled out as to which are those data centers which are going to be notified, and only there will this tax holiday to the foreign cloud service providers be available. That's point number one. The second point, and which is where I would want to seek a clarification from Bala, apart from the fact that there was an apprehension whether the foreign cloud service providers will create a taxable presence in the form of permanent establishment, which seems to have been clarified by this proposal, there's an ongoing controversy. Wherever an Indian customer makes payment to a foreign cloud service provider, there is typically allegation by the revenue authorities that that remittance is in the nature of royalty or fee for technical services, again subject to tax in India. And I don't know whether this amendment seeks to overcome that controversy also or not. And if that aspect can be clarified, it will greatly help the industry. Thank you.
No, so that is completely a different issue. I don't think we should mix that with this. This has nothing to do with the payments from India. This is only addressing those CSPs which are procuring services and paying into India, not receiving from India.
So Bala, take a case where there's a foreign cloud service provider which has procured data services from a data center in India, and thereafter it provides cloud services to an Indian customer through an Indian reseller. So when the Indian reseller makes payment to the foreign cloud service provider, is there a potential risk of that payment being characterized as royalty and fee for technical services
It
subject to
is
tax
not
in
a
India?
risk,
Or,
Himanshu. It
yeah,
is not a risk. It is something which is taxable, and therefore you will have to face that. There is no risk on that.
so therefore, this exemption does not cover that aspect of royalty or FTS. That will have to be
It is
separately
not intended to cover
addressed.
that leg.
Okay, got it. Understood. That's what I wanted to see the
Anshu, that's
clarification.
anyways, under the way at present it is already being addressed, through the normal assessment litigation process combined with the APAs, right? So many of them who have the reseller or associated enterprises in India, they are already working through the APAs to get clarity that, there is an arm's length margin. But clearly, I think, this is this gives comfort on the other aspect that using data center in India does not create taxability.
Appreciate. Got it. So that's a clarification which I wanted. Thank you, Ashish. Back to you, Ashish.
All right, all right. Thank you, Himanshu. I was just worried that I'm losing my job as moderator here, but Thank you for that to me. What I will also say is that we're going to do a little bit of a pivot in terms of how we run this webinar going forward. I mean, after we do a one round with each of our experts, we'll actually allow more conversations where we get to ask any of the clarifications and all of that to Bala. And I'm going to just use a very quick question which has opened from the audience. So, because I want to make sure that we involve our valuable participants in this, and I don't fully understand this question, but I'm going to throw it up, and maybe Bala, if you want to answer it, what does it even mean? How will joint venture or hybrid ownership structures collaborating with an Indian be treated? Uh, so frankly, I'm just reading this question, but if you can give
What
a
is
bit of
it?
context and if you have an
How is
answer.
what can you repeat
How
the
will
question?
joint ventures or hybrid ownership structures, which means collaborating with an Indian CSP, be treated?
It doesn't make any difference whether you are part of a group or you are part of a joint venture. Again, this is my personal view. I don't have the complete facts, but on the face of it, I don't think it makes any distinction. At least the intent for us is not to make any such distinction. Any foreign service provider who is a non-resident procuring services from a related or an unrelated data center service provider does not have any tax consequences in India as long as his services are rendered to a non-resident. That's it. As simple as what I have explained.
All right, thank you. Really appreciate you taking a quick answer on this, and I do understand that we need more facts, and obviously as Nasscom will be collating some of the queries which are we feel are validated queries, and before the budget is put to final implementation, I think there is a short window of opportunity, and we will use that. So now coming back, Himanshu, and I'm stepping away from these big questions on international taxation, both in terms of CSPs and the APAs and safe harbor, to go to another larger topic that we have. And I'm also conscious of time. We are more than halfway past this webinar. So we are going to be trying to be more efficient, but I want to be also unfair to my other speakers. So on this entire ease of doing business, and it's a journey, right? So we move from assessments to all assessments becoming, digital and faceless. And that transition is really all about ease of doing business and reform. Think about that as the broader journey. Now, within that journey, I think things that I often say in IT sector is that we don't want to just cut and paste old processes into a digital process, so that we don't necessarily land up in a situation where we had an opportunity for a larger reform, but we have just digitized what we were doing in a non-digital way in some sense. So taking that as a larger context, and I think there are some good wins in this budget, which Nasscom has been advocating on behalf of the industry, and which I think Bala also mentioned. So, for example, the reduction in pre-deposit, it really unlocks working capital. And I thought that there was also this provision around that you can, even at the time of reassessment, kind of pay a kind of a 10% additional tax and revise your returns in some sense. So it kind of, what Bala said, it clearly talks to preventing disputes rather than solving disputes. So there are these significant steps, and I've not gone through the fine print in so many details as you. But since you have been working with Nasscom and we have been driving a whole set of agendas, how would you rate this budget in terms of ease of doing business from a point of view of the broader tech industry, which also means the large enterprise, but also the SMEs and the smaller enterprises? That's really my big question to you, and it'll be great if you can answer that in about 5 minutes.
Sure. Thank you, Ashish. Frankly, there are a lot of proposals in the budget to facilitate ease of doing business as far as taxpayers are concerned, especially taxpayers in the IT and ITES industry. The biggest proposal is in the context of, the liberalization of the safe harbor norms, whereby the limit has been enhanced from 300 crores to 2,000 crores, and a very, very attractive and a competitive margin of 15.5% has been proposed. So that's one big takeaway. As you rightly said, Ashish, a few other proposals in terms of revision of timelines for filing revised return of income, allowing taxpayers to file updated returns even in case of a loss return, allowing taxpayers to file an updated return even post commencement of reassessment proceedings, rationalization of the prosecution proceedings, penalty proceedings, doing away with decriminalization of some of those proceedings. Apart from that, this entire controversy surrounding the Roka bathroom issue, the DIN controversy, the controversy surrounding reassessment proceedings, FAW versus JAW, all those controversies have been put to rest in the current year's budget. And having regard to all these proposals, I think it's a very, very welcome proposal in terms of facilitating ease of doing business for taxpayers.
All right, perfect. So I'm going to just ask one more quick set of questions, and hopefully will give us a quick reply. So I again tried explaining this the developments on the minimum alternate tax to some of my industry. I didn't get a very clear sense in terms of how industry is processing it. I mean, I can see from the government lens that this is a clear direction that we would like industry to shift to the new regime. If I were to simplify in some sense, that's how the policy levers are probably rooted. But is it true to understand that some of the companies who are in this last bucket of their tax holiday from the erstwhile SEZ scheme, they will still need to do maths and figure out which way they would like to take this forward, or does it land them in a fair position, or is it a bit of a tough thing for them? So that's the point number one, and you can give me a simple answer. We won't go into the details. The second part is on the buyback. So we have seen the on the capital gains, there has been a bit of thinking that over the years we have seen happen, and now we have gone into that more simpler system, if I were to say, where you adjust your cost of acquisition and you pay your taxes. So is that again something where firms will need to really look at their individual scenarios and figure out whether it's a good thing or a bad thing, or there's a general answer from a tech industry that we can take from these 2 points?
Right. So, first, as far as your question on MAT is concerned, what is being proposed in the budget is that going forward, the MAT rate has been reduced from 15 to 14%, and that's the final rate. And after that, no MAT credit will be allowed going forward. But if you got any unutilized MAT credit, say as of 31st March 2026, then you are allowed to carry forward that MAT credit into the new Income Tax Act of 2025 and then utilize that MAT credit, provided you switch to the new tax regime. If you continue in the old tax regime, that MAT credit carry forward is not allowed. But if you switch to the new regime, you're allowed to carry forward the MAT credit and then set off that MAT credit against the annual tax liability which will be due for a taxpayer up to a limit of 25% of the tax liability. So again, that's a welcome provision. And as you rightly said, Ashish, all companies will have to do a maths in terms of where do we stand in terms of their past MAT liability, in terms of the unutilized MAT credit available with them, and in terms of the way forward thereon. So that's as far as MAT is concerned. As far as taxation of share buyback is concerned, until 2013, any income arising to a shareholder on account of share buyback was subject to a capital gains tax in the hands of shareholders. In the year 2013, we moved to a regime whereby the incidence of tax was shifted from the shareholder to the company and a buyback tax was introduced. In the last year's budget, there was a major change whereby the amount paid by the company to the shareholder on account of share buyback was deemed to be a dividend. And we are now going back to the pre-2013 regime, whereby we are saying that whatever amount is paid by the company to the shareholder on share buyback, the income of the shareholder will be treated as a capital gain and then be subjected to tax in the hands of the shareholder as per the rates applicable for capital gains. So as far as all the small shareholders are concerned, they stand to significantly benefit from this proposal because the rate of capital gains tax is far lower than the rate applicable on dividends. As far as promoters are concerned, they'll be subject to a higher rate of tax. So if it's a promoter company from which the shares have been bought back, then it will be subject to the normal corporate tax rate of 22%. Whereas if the promoter is a non-corporate promoter, then he'll be subject to tax of 30%. Either which ways, even the promoters will not be worse off as compared to the tax they had to pay in the last year as under the dividend so-called dividend regime. So overall, the share buyback, the new regime on taxation of income from share buyback is a very welcome proposal. Is a good proposal which will benefit everybody.
All right. Thank you, Himanshu, for explaining that for our audience. Mukesh, I'm going to come to you. So, Mukesh Bhutani is the founder and managing partner at BMR Legal Advocates. And I know, Mukesh, you have been listening to a lot of this conversation. And to be honest, we put you this knowingly. We've done the good job. We have called stuff. And now we want you to talk about. So I started by saying, bold. So the judgment seems to be that yeah, this is both predictable and fairly ambitious and bold. But where do you think we could have been bolder? What are these blind spots? What are the misses? What are some of the things that probably this budget taken the opportunity to do so, given all the global challenges we have, the spotlight on India in terms of how we think about our trade and all the focus that we have in terms of boosting our domestic productivity. And I know taxation is just one lever, and there are a lot of other levers that need to work. But what is your critical assessment, if there is anything on budget? Mukesh, over to you.
Ashish, you're good in playing good cop, bad cop. I don't mind being the bad cop. So, firstly, I'd like to start with congratulating Mr. Balasubramanian and his colleagues. I think it's a fantastic job. At a more philosophical level, I heard many experts from the fraternity criticizing the budget for the simple reason that there were 100 amendments in the Income Tax Act. But I don't think that criticism is fair, because the whole idea behind rewriting the code was to clean up and weed out the old part. But as Bala correctly pointed out, it's an exercise, work in progress on reforms. And I think from that point of view, it's a truly reformative budget for all the analysis that Shefali and Suchint and Himanshu spoke about. Half glass empty. I think the only miss for the IT industry, I thought from a Nasscom expectation standpoint, was addressing the vexed issue of ESOPs. I think that is an issue that has been a pain point. I felt that that was a big miss, but I hope that it will continue. I also wanted to, I was listening very patiently, and I felt that the explanation that was given behind the rationale on data center policy certainly helped me clarify things in my mind. But just for the benefit of others, I noted a very important observation that was made in the economic survey on India's data center capacity, one which is being projected to rise from 1.4 gigawatts to 8 gigawatts by 2030. So that's kind of nearly 5 times. And that's perhaps the reason the tax policy push, besides other things that is being done, came very, did not come surprising to me. There is another important observation that has been made. Perhaps that's the reason this condition on reseller has come in. So India today hosts only 3% of the global data center. That's primarily because the concentration of data centers is in the developed economy. And this is despite the fact that India generates 20% of the world's data. Now, this mismatch perhaps explains why the Indian reseller condition has come about. But I have no doubt in my mind that this sole bold tax policy move is going to augur very well for the overall development. I think we also need to see how the Ministry of Electronics and Information shapes the policy, because there are many questions with respect to the scope of data center activity and what is really data center. I heard the word cloud uh, services being used many times, Ashish, by you, including Shefali as well. But I just feel that we need a more clearer articulation on data center. As such, I do not have any criticism of the budget. My only question, to the drafters of the bill is, we have a uniform safe harbor now, which puts to end many unwarranted disputes by raising it to 2,000 crore. Why 2,000 crore? Why not 10,000 crore? If we are saying that we want to be attracting more GCC investment, uh, that's not, I mean, why do you want to discriminate? Don't you want companies who are between, 2,000 crore range to grow up to 10,000 or 20,000? So I just felt that that was a bit, kind of, we could have done more. We could have been more bolder. I mean, I have not seen in my entire career some form of a carve out. I call it carve out for data centers, not tax holiday, because it is truly a carve out. And I think Shefali articulated that very well, why it is a carve out. So I just felt that we could have been bolder on the safe harbor regime. Again, coming back to data center, the 20-year carve out, why did we leave the carve out for global value chain to encourage non-residents giving tooling for contract manufacturing, that too within a customs bonded warehouse to 5 years? I think we could have been bold. Why not 20 years? Why not Viksit Bharat for that as well? That's my second point. I think that overall it's been a phenomenal change. I think, changes that have been made to assessment procedures and, take weeding out unnecessary litigation is going to leave many of us with less productive work. But I think it's fantastic.
All right, great. No, good to hear that from you, Mukesh. And the points which you raised, I will leave Bala to also probably come in when I get back to you, Bala, on some of the reflections of what we have heard. But I do want to double click on a couple of points before I go into talking to Mahesh, which is really what Mukesh, what you said. So one, on the startup ecosystem, I think it is important for us to keep at it from a policy lens, because ultimately, I think one part where we look at it from an employee and a talent perspective, which is to really say that, given that ESOP is really a tool for attracting talent in our industry, at least from a startup point of view, where you can't really pay those salaries upfront, and a lot of the employees are also looking for gains out of equity in some sense of the success of the startup. And the problem is very simple, which is to say that, when they are taxed on the ESOP, it is they don't have the money to pay for it. So can the taxation be aligned to the liquidity event so they can pay that tax? And I think government accepts it, and they have moved forward on this in the past. But the problem is that that benefit is only available to, let's say, less than 4,000 startups, whereas even Nasscom, which has a very strong or let's say, a very tight definition of what we call a tech startup, we have at least 30,000 of them. And similarly, on the employer side, there is an expense which is a deductible expense, and there are court rulings, but there continues to be some lack of clarity. So I think, to be honest, that's an agenda that we will continue to pursue, and that's important. On your 2,000 crore mark, we couldn't agree more. But we probably see it as a glass more than half full, to say that a lot of the use cases in the industry, in the way it is presently structured, I think it does provide that window for them to use this green channel. And I think if I were to put on a more neutral hat, I think this is something for industry to use and utilize, and then make a case for the government that, look, there is a overall, tax gain and growth and why not increase it or take it away. So that's how probably we are processing at this stage. But with that, Mahesh, I'm going to come to you, and we know that while the star of this conversation is the direct taxes and the international taxation bit, but I think there is a good set of things that we must highlight for our audience in terms of our GST agenda, which this budget kind of takes forward. And obviously, if there is anything that we have missed in terms of customs, which is relevant, but I will request you to be really quick on this because we have the next segment coming after you speak.
Thank you. I'll still believe you saved the best for last. But clearly, as Bala said, the GST announcements are consequential, and therefore, is there something hidden? Certainly not. Things are getting more simple and boring in some sense, but very bold. Sticking to what you said, the intermediary one, which a lot of our members have been talking about, the government came out with the GST Council came out with a very good circular in September 2021, but there were still challenges to say the least. And now it's behind us. The law is formally amended, and now that's the intermediary provision goes away. So from a cross-border world, that's something that is something that industry is certainly going to benefit from. I will come to a little later what I think we want in terms of next steps, because we also have in the last council meeting the e-commerce recognition for principal place of business, and that's an in principle approval. Clearly, I didn't expect anything from the budget, but these are two things. From a customs law standpoint, the Honorable Finance Minister announced early December that there are big bang reforms, and there's clearly no disappointment on that front. It's been delivered. But I do think that from a fine print, I was hoping to see something more on the SEZ space vis-a-vis all our tech companies and who have a lot of operations in SEZs, challenges around endorsement, automation, interplay between the Ministry of Commerce rules and the Ministry of Finance. I did read from the chairman of CBIC saying that there's something work in progress. But so for me, when I look into what is hidden or missing, I would say from a customs law standpoint, there are things that are done well on the AEO front, amongst others. It's moving to a very trust-based system and a very automation-based system on customs. And I think that's on light of or very similar to the benefits that we've seen from GST. And therefore, now we're seeing that getting replicated far even more in customs in light of the new trade deals, 2 deals in the last 7 days. What better timing is all I can say, Ashish, for us. While as services companies, we may intuitively say, okay, this doesn't really matter, but with the new age R&D innovation, chip designing, there's so much inbound and outbound movement. I would encourage our members to look into the fine print and take benefits of the schemes that the government has not announced, but expanded. So that's what I would say from a customs perspective, Ashish.
All right. Thank you, Mahesh. I think it has been, even if you kind of, focus on the GST journey, I think we have seen some bold reform, and the removal of this deeming fiction in terms of the place of supply for intermediary was a prime example of that. And I think we do have a set of agendas which probably will not take up this webinar, but we are hoping that once the Ministry of Finance is a little more free from this budget and so on and so forth, and as we look at the next GST Council, probably some of these other things which our industry is looking at from ease of doing business is really something that is taken up. So I know, Mukesh, you have your hand raised, but I'm going to request you to just hold on for a minute. So, Bala, you have heard one round of conversation with our experts, and pretty much I think the verdict is so much positive. So, congratulations to the government for really taking. And we are really grateful in terms of as an industry that this is the direction. Are there anything that you heard from our experts that you would like to comment on or further amplify? And is there something in the budget that probably because we are all here, other than me, all the experts, so is there something that we are missing as a big picture that you want to, for our audience to really appreciate, given that we are really representing the larger tech industry and will really benefit from that? So quickly from you, and then I'll come to, Mukesh to ask his question. I'm not able to hear you.
Sorry,
I think, yeah.
I was on mute. So yeah, thanks, Ashish. I think it was a very engaging discussion. But let me, pick up a couple of points, and I want to just clarify 2-3 minutes, and then I will also highlight a couple of items that are relevant for the IT/ITES industry, which I think we should look at and see how we can make use of it. Uh, you know, I I heard Suchint. I think Suchint raised a lot of questions. I would say that I think we, from the government point of view, we are moving to a very simplified, unified structure. So I, would kindly request, the industry not to complicate it by, asking what is KPO, what is R&D. From our point of view, we don't want to differentiate. That is very, very clear from the Honorable FM speech. It is IT/ITES industry as such, and it is going to be one segment which will be provided with 15.5% of margin, right? So therefore, let us not get into this classification, business, and try to make ourselves relevant in this particular context. So that's number one. Number two is, yes, he is right in saying that the way we will collect the data, it is not for statistical purpose alone, but it is a self declaration, from the point of view of the companies itself, so that they make themselves entitled and eligible for the safe harbor regime. And mind you, there is not going to be a verification by the assessing officer, which is there in the current safe harbor provisions, where they will have to file an application before the AO, and then it is approved by the AO. So that is not going to be the process going forward. It is going to be an automated self declaration, and once you declare and file, you are in the regime. So there is nobody who is going to ask you any question. So that particular thing comes with a responsibility as well, because it requires the industry to be minutely looking at the requirements and fitting themselves into the window, so that this particular regime stays forever the way it is conceived. That's number two. Number three, there were certain issues in terms of the updated definition of cost base, etc. In my view, I think the current definition of cost base, how the operating costs are looked at, operating revenues are looked at from a safe harbor point of view, is good enough. I think it is detailed, and I think we should live with what is there on our plate at this point in time, and therefore we should not complicate it, going forward. Number four, I think Mukesh raised this issue of why 2000 and why not, something more, something, like 10,000 crores. I saw you clarified it, but, I just want to put out certain facts here. So we looked at, roughly about 45,000 of filers who do, 3CEB, right? And out of that, about 40% of them relate to the IT/ITES. And when we bucketize them, 98% of them, and I'm just giving out data which is based on actual facts. 98% of them are below 2,000 crores, right? And therefore, we have covered in the safe harbor regime 98%. Number one. Number two is, for this 2% who are above 2,000 crores, we are giving them an accelerated APA program of 2 years. And it is not just a commitment on paper. It is going to be a reality in terms of how we implement it. And there is going to be a 6 months of window where assessee can make a request and seek an extension of the APA timeline. But other than that, I don't want to say it is statutorily imposed, but it'll have the weight of law, either in the form of a rule or a circular, where we mandate and it is not on a best effort basis. It will be a hard deadline of 2 years, and that will be observed. in terms of how we provide that certainty. Number three is that even amongst the 2%, which is about 300, 400 odd guys, almost 60 to 70% of them have already got APA, right? They have got a certainty in terms of how they have approached, and they've got APA program in their favor. So we didn't want to kind of confuse the state of affairs for those people who are above this 2,000 crores and who have got certainty in terms of the APA. And therefore, when we look at Safe Harbor plus APA certainty that we have given in terms of the accelerated program, it is an integrated program which addresses the entire universe of ITers. So there is no segmentation of sorts in terms of how we have approached it. We have approached one set of guys in the Safe Harbor and one set of guys in the APA program. So that is something that I thought I will place before all of you. The second thing is on the toll manufacturing, which Mukesh raised. It's a fair point that when we have provided IFSC 20 out of 25 years, data center 20 up to 1947, 2047. Why only 5 years for toll manufacturing? In my view, toll manufacturing is something that we need to get used to as a country, and we don't know what are the economic consequences of it. So we have just started off in terms of how we have approached it in terms of the exemption itself. And the exemption itself is a very unique exemption, and therefore we didn't want to kind of commit to a longer period of time. So let's see how it pans out. In my view, the best argument from the industry would be to show results and show the economic, the multiplier that we are able to bring to the table. And then, once we kind of, have that kind of an argument from the industry side, I think it is easier for the department to look at the larger economic aspects and not just focus on revenue. And in this time, we have not focused just on revenue. We have focused on larger economic aspects when we have looked at these proposals. So in my view, I think let us take block by block and try to build these over a period of time. And lastly, I would want to just say that please don't knock off anything from your agenda. So Ashish said that we will knock this from the agenda, etc. In my view, I think as an industry forum, as people, the fellow professionals, I think we need to continuously work with the government, and we are not putting any full stop to any discussion, whether it is ESOP or whether it is anything else. I think, in my view, we need to continue, and for sure that the Safe Harbor has been in discussion for last 2 years, and we have had, personally, I have had many sessions with your industry colleagues and with the professionals as well, in terms of building various models as to how we try to make case for something which is palatable to the industry and which is also palatable to the tax administration. So therefore, from that point of view, in my view, we should keep engaged. We should keep working on every aspect that is relevant for the industry. And I'm sure both of us will see something which is a mutually agreeable point where we can see value for the country, which we can jointly create.
No, thanks, Bala. And I just want to take a minute to kind of, talk to what you just said. And to your last point first, and we were having this conversation internally in Nasscom itself, the policy cycle and how we see outcomes. And the general consensus, at least in my view, is that overall, and this is not just tax policy, that some of these things can take 2 to 5 years to really, translate into outcomes. So we shouldn't be giving up. we need to back it up with data, more evidence, and better arguments, and to really sharpen the place for these outcomes. Now, obviously, there is a little bit of a loss when we think about a 2 to 5 year journey in this fast-paced, dynamically evolving world. But I think that is a work in progress in terms of how we can shorten it, and some of that onus is on people like us to do a better job to probably shorten it. And on the 2,000 crore, I think, to be fair, as Nasscom, we did put out a menu of options, and one of the numbers that we put out, and the only number that we did put out, was 2,000 crore. So at least from a Nasscom point of view, to have got that exact number, I think it's a good, excellent step forward in terms of taking it forward. And also your clarification on the APA, that it is not just best effort. I think that's really, really insightful and valuable, and that a lot of the industry will really, really appreciate. So thank you for that. And I see a hand raised. Bala, do you want to come in?
So, in fact, what I want to say is, using the taxman's language, you will be kicked out of APA if you are not able to do the agreement in 2 years. That is what, if I don't want to say this is in lighter vein, but this is the discussion that we have had, that, taxpayers would be kicked out because we don't want them to be in APA program forever and keep the uncertainty for themselves, and also an uncertainty for us, because we also have a transfer pricing assessment which goes on along with APA, right? So it creates multiplicity and duplicity of proceedings, and therefore it is in our interest as well, is tax administration's interest as well, to end the APA and give some kind of a certainty, either in the form of closure of APA or in the form of disposal of APA, in terms of it being closed.
All right, great. So I know we are out of time. We are in our last 5 minutes. Probably as a moderator, I could take the opportunity of requesting our speakers to give us flexibility of maybe 4 or 5 minutes. That is okay. But with that, I have at least two people, Mukesh first and then Shani. Mukesh, you had a point to make, and I think it's a very important question for Bala. If you have that, then please go ahead.
No, I think your question on what were the misses, I missed out two things, which I just thought I will just mention it, but I don't necessarily need an answer. One is actually an observation on the data center. By saying what we have said in the domestic law, India is also trying to say that no matter where on the multilateral front we end the debate, some form of a nexus principle evolves from the multilateral debate. None of that impacts India, because you have now brought something in the domestic law to do a carve out. The second was the conspicuous silence of Pillar 2. Now, I am fully familiar with India's reservation on Pillar 2, but I thought that with the development of US being given a side-by-side package, India also could have joined the bandwagon, such that it is a part of the framework wherein we already have 55 nations. And why do I say that? I say that because next Thursday, when the UN Framework Convention meets to debate Article 5, we know what's the India's broader policy statement at the UN, particularly given the interactions with the OECD-led process on allocation of taxing rights. So the primary concern by India has been that the risk of a broad interpretation in the framework for Article 5 is fair or not. And hence, what is important is a statement that has to be made, though not translated in a law, as to where do we actually stand. Because given the surge of large multinationals in India who are subjected in their home country to the multilateral framework on the globe, we could find ourselves in a bit of an isolated position, and possibly in the medium to long term, give up our rights for taxation under Globe 2 proposals.
All right, great. So just hold that thought. What I'm going to do is that I need to improvise. So one, Bala, if you would like to respond, just hold that thought. But Shefali, again, I'll take your question, and then I want to put two questions from our audience, and then give I don't know how much time to Bala, and then we will end this. So, Shefali, quick.
Yeah, thank you, Ashish. I'll just make it quick. Again, in connection with the data center carve-out, which is the landmark, reform in the budget. I just wanted to check with Bala, in how will the whole transition work out? So, for example, the data centers that are already in operation, and the scheme for the data center under data center policy is yet to be framed. So will there be some kind of a passage for the existing data centers into the new policy and the new tax framework? And secondly, also, I think while I understand the logic behind, the all India revenues being consolidated under the Indian reseller, but for many many cloud providers which are already operating under a certain construct, for them to transition into an entire India reseller model might also need some time, because when you have an existing contracts, when you renew them, it's not that easy to just switch off all from one and then transition. So will there also be some kind of transitionary help till they come to that model, so that the larger clarification about no taxability, that does not get impacted by, even if a smaller amount is yet not transitioned into the reseller model? Only those two questions.
Okay, all right. Thanks, Shefali, for kind of highlighting that. So the two questions from the audience, and I'm just reading it out, Bala. And so one is on the CSP and data center, and second is on the GCCs. So the first one is it fair to interpret the budget proposals as offering a tax holiday at the foreign CSP level for global services delivered using India data centers, while the Indian operating entities remain taxable under the current IT and transfer pricing framework, with safe harbor and APAs primarily aimed at reducing uncertainty rather than altering the tax? So that could be a yes and no answer. And okay, so that's a yes. So to that we have already answered. So the answer is yes. The second question is for the larger ITS captive centers in India, which are above this threshold of 2,000 crores, meaning the GCCs, will common definition and margins as provided be accepted by APA authorities and the TPOs? So that is the second question. So Bala, you have all the questions. You have very little time, so happy to hear
I'll
you.
not take much time because I think we have talked enough. On the last question that you raised on whether this definition will be accepted in the APA. So APA does not have classification even today from the point of view of threshold. Once you get into the APA program, you will have to justify whether you are a functionally a comparable company, etc. In my view, I don't think it is going to be any different on the APA side, and it'll follow the stated intent in terms of how we have approached the safe harbor itself. In fact, the safe harbor margin itself can provide some kind of a persuasive, because the margin is not something that has been put as a negotiated margin. It is a margin which has been prepared based on certain comparable analysis, and we have tried to fit into that margin the band which is provided in the Income Tax Act, and we have provided tried to fit within that comparable the tolerance range, as we call it, and therefore it should provide a lot of persuasive guidance in terms of your APA negotiations. On the issue of transition, which Shefali raised, in my view, I think this is something that we will have to work out. So let's something this aspect, we let us see how we should address it. But I'm pretty confident of a good policy coming out of MeitY, because we have already had many rounds of conversations with the ministry, and this has been done in close collaboration with the ministry, and they have been taken into confidence on many aspects, and therefore you should hear a policy which is fairly acceptable to all the participants in the industry. And on the issue of reseller, I think I think it is too much of a stretch at this point in time to stretch this policy and seek carve outs within carve outs. But let's see how it pans out in terms of the transition on this reseller itself. On the issue of pillar 2, I think it is not fair for me to comment on pillar 2 because we have not put out any official statement on it, so I will reserve my comments. On the issue of data center, Mukesh, I didn't understand your first question and comment. So if you if you think it is appropriate, we can take it offline.
Yes.
And if you want to clarify that, through Nasscom to all the industry colleagues, you can do that later. But I don't want to waste in a two-way conversation.
Let's take it offline, sir. Let's take it offline.
All right, all right. So thank you. In fact, Bala, on your last set of comments, also very insightful and welcome from an industry point of view. So on that note, as always, I think we are completely out of time, but I think every minute has been very valuable and insightful, at least for me, and I'm sure for a lot of the industry colleagues who joined in this webinar to really get this direct insight and explanation from all our experts. And I would really like to thank everyone who joined this call. So Mukesh, thank you very much. Shefali, thank you very much for joining. Mahesh, as always, thank you. Himanshu, it was wonderful to have you here. I know you were stuck in another meeting. Suchint, as always, I think this is something we have been working on, transfer pricing. So special cheers to you for collaborating with us in a lot of these efforts. And to Bala, I think it is just such a good opportunity for us to be discussing so many positive developments and to really then say that how we can build. And from an industry point of view, I think squarely the ball is in the industry's court to translate all these policy levers into actionable investments and outcomes and growth. So I think this is something, the larger message that we are taking back to the industry. And of course, we'll come back to you with another set of issues, including new ones, including the ones where we have not made progress yet fully, because we know that this is a two-way consultative process. And as long as this is something that is always moving forward, it is always very rewarding. So with that, thank you all very much and look forward to more such interactions going forward. Thank
you, Ashish.
Bye-bye.
Thanks, everyone. Bye.
Bye-bye.
Thank you.